I'm retired. I don't need to build wealth. Okay.
Okay.
Um,
Why are we even
I just
why are
don't
we even
want to lose
talking?
it.
Like what like I'm concerned. I am wondering why you're even here. I know your son wants you to get into it, but like, do you have any interest at all? Like, is there
Um,
an inkling of curiosity, or is it just like, is he
it's
making you do this?
FOMO is the only interest I have here.
Yeah.
Okay, so
It's
you think you
all
have FOMO?
yeah.
Yeah.
It's basically FOMO.
So you're going to be fine. You're going to be fine. Like if you don't risk 1 cent, you're going to be fine for the rest of your days and probably leave money behind. Agreed?
Yeah. I could
That's
sum it.
fair.
Yeah. He has zero need to get into crypto.
Okay.
So it all comes down, I think, to can a certain legitimacy be proven to the system, and is it safe enough, right?
Yeah.
And then all of the other tax stuff, like you're the genius on that, and that would probably take way more than an hour. But
I think all that's irrelevant, right? I don't think he has a tax question. I think Miley has tax questions, which we're going to address.
yeah,
I think
this is about legitimacy.
yeah, I don't think Pops has any tax question. Like there's a great saying: if you get the concept, the details are relevant, and if you don't get the concept, the details will always be irrelevant. He doesn't get the concept, and he may not get the concept. Like I know you think whatever, I have this magic power of whatever, but first of all, I'm not here to sell you anything. I think with or without your participation in this market, there's going to be lots of people piling into it. But I had a lot of the same concerns that you have, and I've made peace with them enough to not only put my own money in there, but realize, gosh, this may be the best place I've put money in, in over a decade. And I don't know if you're going to get there. And to be totally honest with you, I don't care if you do or you don't. But I'll, I'll share at least what I've learned from my experience, since I'm, you're kind of on top of the ground looking into the rabbit hole going, that looks kind of dark and scary. And, your son's gone down there and I've gone down there, and we can at least share with you what we've seen from within the rabbit hole.
Yeah.
Does that sound fair enough?
We went through one of your videos about, how to use Anchor and get onto it. And then we went through another one about how does Anchor maintain its 19.5%. And it's by having the leverage of when borrowers decrease, it increases the rewards. So people come back and borrow again, right? And how that's written into the smart contract.
Yeah. And did you get to the part, and it's just my theory, but that, when new companies are formed in Silicon Valley or whatever, like even good companies, not vaporware, there's usually a bunch of VCs that are involved in the early stage, and they get lots of tokens or stock that could be vaporware, and they get lots of that for basically being an early investor. Did you hear that part or no, Pops?
I understand that part.
Yeah. So to me, that's what the
IPO market, right? If you happen to be the guys who get in before the IPO, you're lucky, or you deserve it. I think
so
most of them don't deserve it, but some of them do.
Yeah. So what's cool about DeFi is it's more community based and less kind of lucky early stage VC based. And so let's just focus on Anchor right now, because I think that's where the heartburn is. So Anchor protocol is one of the staple protocols of the Terra ecosystem in Luna. And it's almost like a savings and loan, where there's depositors who deposit UST, which is the Terra equivalent of dollars, stable coin, right? It's like a money market coin. And it's only valuable because other people think it's valuable, whether it be people who spend it or merchants that accept it. But let's face it, the US government and the US dollar seems very Ponzi-nomic to me right now. The way that the printing machines are overheating, right? And the amount of debt. And it's really only accepted because everybody still thinks it's valuable. And I've heard for years, like at any moment, China could just say, screw this, and dump a glut of treasuries. And all of a sudden, like the dollar loses its peg. Do you believe that to be true?
you know, they'd kill themselves if they did that. You know, so much of their wealth is tied up in U.S. bonds. If they dump too many bonds, the bonds that they haven't sold yet become worthless.
I get that.
You know, they're not going to.
But can we all agree that the tokenomics of the U.S. government aren't exactly of the best design right now?
Well, yeah, currency is currency. And, you know, it's basically it's backed by the faith you have in the government of whatever nation is printing it.
And let's just get clear.
You know, we've given government the right to create value from paper, from nothing. Paper and ink. They turn paper and ink into $100 bills. We trust the government to do that.
Yeah.
It's
a
little
hold
different trusting some guy on the internet that you don't even know, and you know, and who knows who's behind all these thousands of coins out there.
Yeah. So just to be clear, I'm not that guy behind the internet. Like, I didn't make this. I'm just, what a lot of people are doing is with their dollars, they're opting out. What's going on? What's the faces?
Oh, I was just reading a Twitter notification. Keep going. Never mind. I'll try not to look at them.
It wasn't me.
Yeah.
Okay. I just saw his face. I'm like, okay. So a lot of people are opting out to a certain degree of that system and opting into that system. And I realize that's what we're talking about. And I agree with you that you're comfortable with the tokenomics to a degree that is on shaky ground, but exists and is still being accepted. And so for a lot of people in your shoes, and you don't have to do this, what they're doing is they're taking a portion of their money as a hedge and they're putting it into this, they're opting out of that system with those dollars and they're putting it into this system. Now I realize you're not there yet, but that's what's happening. And when more and more people opt out of the existing system and opt into the new system, then there's fair market value. There's an exchange of value. And right now there's a lot of people that accept it as not legal tender, but as a store of value, and they'll exchange it for goods and services or other vaporware or whatever. That's generally what's happened. The fact that it's continuing to be legitimized, like there's lots of protocols that are coming where you can spend your UST, your Terra money stablecoin that tracks the dollar, you can spend it for actual goods and services. Maybe you're not going to get there today, but maybe when Gwei gets his Alice Finance card, and maybe you should do this right after this call, is go to Cato Money and buy some gift cards. That's like Terra's version of Amazon right now. You'll at least see that for the moment, just like citizens of the world with the US dollar, for the moment, people are accepting that as a medium of exchange. Fair enough?
Yeah.
Yeah.
Let me continue.
And like WhatsApp, you know, WhatsApp just is launching their cryptocurrency pilot program using the Pax dollar on, I believe it's the Stellar Rail, but I'm not sure.
Okay.
Yeah, So WhatsApp and Meta are working real hard to try to jump on the stablecoin market because they see what's happening with WeChat in China, how everything is basically, you know, Apple Pay, but through the WeChat version of it. And they want those rails. They want
absolutely
passing through the rails. You know?
Making whatever 1% or 2% or 0.2% off a massive amount of volume for people who are opting out of snail mail. Like
right.
I'll bet you when email started, Pops, it was like, what the hell is going on here? I'm going to send a letter. But now it's like, I got to send a letter and lick a stamp. What's going on here? Where's my online banking? This is just another iteration of that. And I realize it's a little more foreign and a little further removed, but that's essentially what's happening. And the Terra ecosystem has really asserted itself. It's not number one, but it's very quickly rising the ranks to where people like your son and myself have decided to get on board, not because we think, hey, we're early on the Ponzi and hopefully some suckers will come in behind us and provide us with exit liquidity. Is we believe that it's here to stay and we want to be early so that we can invest little bits of capital and have it someday be worth a lot, just like you have done for so many years with stocks and real estate and everything else.
Yeah.
And what I would say is, whether you believe it or not, and obviously do your own research, but if you do your own research as the result of maybe some of the things we share on this call, and you get comfortable for a portion, take a portion and invest in this thing that seems a little beyond you, just like the vaporware did, because I agree with you. And I've actually shared this before. There's a lot of parallels with the tech bubble. 99% of this stuff will go to shit. 99%.
Yeah.
Maybe more.
The blue chips will stay.
And there's some small caps that we don't know about that will.
Many of the companies of the late 90s just disappeared.
Absolutely.
And for, talk about an example, Microsoft, if you bought it in, say, January 1st of 2000, you lost 50% by the end of that year. You didn't break even again for 13 years.
Yeah.
So,
yeah.
I mean, even the good companies can go to ground.
Absolutely. And that could happen. We're obviously aware of that risk. People have shown that you see 80% drawdown in Bitcoin, which I honestly believe at this point, unless or until quantum computing comes, that's really the only one that probably can't go to zero. Everything else pretty much can. So I don't want to sugarcoat things. Everything else pretty much can. But again, we've already established that you're not going to leave the undertaker with the bill. And so as a hedge, if so many people opt out of the old system, as a hedge, it would be wise to carve off little bits this early to get into what your son perceives to be the blue chips. And I still have some Bitcoin. I feel comfortable with it.
I mean, yeah, maybe we could build a little bit of a thesis around just usability of things, because oftentimes the stocks that he and I have, that he's influenced me to invest in, and I've influenced him to invest in, were things that we were already using, whether it be, Apple computers, Lululemon, Chevron, stuff like that. It's a lot of it comes down to, I think, utility and just figuring out, is the stablecoin utility actually going to come true, right? Is the digital, because we're already using debit cards to pay at every single store, right? And it's just going from digital ledger of your bank account to digital ledger of the store's bank account. And the stablecoin market is, all they're doing is opening up that silo of information. So it's now a different digital ledger that everybody can see, and that the banks don't have restriction over.
So you already kind of proved that. I think the fact that basically Meta or Facebook is jumping on board, that ought to show you that there's something there, not only to this crypto, but something specifically to stable coins. And did you ever show Pops Do Kwon's video, that Vimeo video about Terra Money? It's like 7 minutes.
I sent it to him. I don't know if he watched it.
So you got to watch that at the end, and I'll have it in the description.
I don't know if I've seen it.
Yeah.
So it's brilliant. Basically what Do said is he was fulfilling on Satoshi's vision. Satoshi Nakamoto is the whatever pseudonym for whoever created Bitcoin, who's still anonymous. And the vision of Bitcoin was that it would be decentralized, peer-to-peer cash. The problem is, and they have great tokenomics in that there's only a limited supply of 21 million Bitcoin that could ever be made. And there's all these halving events that make it more valuable over time. And so the problem with that is they made the tokenomics so good that nobody wants to spend it. Like Miley was talking about, or like my friend who has been in this really early, who basically, is a sin to sell one Satoshi, which is like the smallest divisible unit of a Bitcoin. So the vision of Bitcoin was to be decentralized peer-to-peer cash that you could cut out the financial middlemen, because like my family, my wife's family lives in Mexico. If we were to send them money, there would be 6 or 7 financial middlemen in there that are not very even quick or efficient or convenient or have a good user interface. And yet they're going to clip us for 20 to 30% of the money transferred. And it's going to take a long time. And it's going to be a pain in my ass. Right? So thank you very much. May I have another? Bitcoin solves that, except for the fact that nobody wants to spend it because it's such a good store of value. And I think if you do get a portfolio, I think you probably should have some of that. I think at the end of the day, until you really go deep on Luna, that's probably the one that you're going to be most comfortable with, I think. And then if you do your own homework and you watch that video, what Do said is, Do Kwon, he said he's fulfilling on Satoshi's vision. And the most important component of the cryptoverse is the stable coin, because the merchants in El Salvador, they're transacting on Bitcoin. Well, some of them are scared. They don't want to sell a damn soda in the morning and only get 2/3 of the value for what they collected by the end of the day, because they didn't have time to transfer it into whatever, the El Salvador stable coin or whatever.
Yeah. So what are they doing on the back end? They sell the Bitcoin immediately, right, into a stable coin to hold in case it loses money before they do their what's it called, their filing of their daily charges.
And so Do started with the end in mind and started with the stable coin. And there were a lot of merchants around Asia that it was very close geographically, and there was a lot of international commerce happening in a fair, relatively small area, and they were getting charged a lot of money. And so he made the Chai system, and I'm sorry if I'm butchering the story, but this is my paraphrase of the story. He created the Chai system with different, the Korean stable coin and other KRT and other ones, so that they could transact across borders for cheaper than they could with normal merchant services and international credit cards and exchange fees and everything else. And that's where it started. It was only later that they adopted Luna and decided to create a whole DeFi ecosystem, because they realized the demand for the stablecoin themselves, it may take a while to really take off. But if they created their own DeFi land, that was happening with Ethereum, which I don't know if you've ever used Ethereum. I know your son has it in his Twitter handle name, but it's freaking slow. It's inefficient. It's like practically unusable unless you're a whale, and it's clunky as all hell, right?
It's really expensive.
It is. And I started thinking I wanted to be an ETH maxi, right?
Yeah.
And
me too.
But really, I was in love with the idea of programmable money, smart contracts, and DeFi. It's brilliant. I am in the financial industry, and I realize that a lot of financial middlemen, as you ever watch Shark Tank, Mr. Wonderful says, a lot of middlemen are going to be losing their jobs. Maybe they can get a job shining shoes, right? And I realize I might end up like one of those guys shining shoes unless I figure out what's going on. Because like you talked about Amazon, you talked about Apple, those were two disruptors, right? They were disruptors, but way back when they didn't seem like they were, but they disrupted industries. The financial industry is ripe for disruption on so many levels. The tokenomics of every country, not just ours, that we just talked about, the inefficient transfer of wealth from banks by banks. It's like I went to Harry Potter Land. They show those old guys riding in the ledgers with the feather pens. We're really just like one step removed from that. I have a friend in banking who's high up, and he says the biggest spend, and this is probably stock that you own, the biggest drag on your stock that you own for JP Morgan, Wells Fargo, whatever, they're buying a bunch of software to transcribe paper into digital info. Like this is crazy town. Like they're still in the Pony Express land.
Yeah.
And it got clear to me when I started going down the rabbit hole that crypto is the future. The question, to your point, is which one?
Yeah. And yeah.
Yeah. It's where's the value? Who decides what the value is, and
The community.
How does it become stable and predictable?
So let's talk about that. So Bitcoin, who decided its value? It's the same people that decided the value of Apple stock. I don't even know what it is today. 160, 170, 150. Who decides that value? Free markets.
Buyer.
A willing buyer and a willing seller.
Last buyer decides what it's worth.
Free markets. Bitcoin, there's a massive pool of people that have decided it's worth this. Could it go down? Sure. Could it go to zero? I think the only way it can at this point, Bitcoin specifically, is if quantum computing hacks it, and then, yeah, it goes to zero. Have you ever did you own WAMU? You're in Washington. Did you own WAMU?
Oh, yeah.
Okay. What happened?
I got burned by WAMU. Yeah, Kerry Killinger came on television and said, we have tons of liquidity and our exposure to the subprime market is less than 3%.
Yeah.
The next day, his bank went out of business.
Yeah. So yeah, he needed a little last minute exit liquidity.
He lied, yeah, he lied on national TV, and the next
Yeah.
day there was a run on his bank and they were insolvent.
I remember that day. I remember the trader saying like, wow, you can get WAMU at like $4. That's like getting an option that never expires. Yeah.
Yeah,
So,
I happened to be watching the news when he said that.
so what do you do in your portfolio, Pops? You diversify. So if something like that happens to one or two issuers, you're still solvent, correct?
Yeah, I have hundreds of stocks.
That's what I suggest you do here. I suggest that you carve off a portion that you would maybe allocate to a sector or even a subset of a sector. And you work with your son to get educated on what the blue chips are. And maybe you're not even there yet with some of the possible emerging small caps. And you pick an amount and you kiss it goodbye.
Well, I mean, there's what is it? Coinbase has 288 coins on it, and like, you know, how many of those 288 are actually worth something?
Yeah,
you know.
So let me address that real quick, because I was like, where's the fundamental analysis coming from the financial sector?
Well,
there's two things. What's that?
There's not going to be any fundamental analysis.
No, that's not true. Like, it may not be what you're used to, but because it's its own animal. But there's two measures that I look at, and we're early. I mean, we're early stage here, right?
Right.
One is TVL. Do you know what that stands for? You want to tell him, Gway?
TVL.
Total value locked.
Total value locked.
Just like AUM, basically.
So there's that much assets in that protocols or in that blockchain's smart contract.
Yeah. Under management. I often think of it and explain it to people as just money silo. Money. It's easy to think of it as money bin within the smart contract.
That's one way of looking at it, but it's actually, I mean, if we're going to compare this to stocks, that's money that's transacting, right? So it's not so like, this is not a perfect analogy either, but it's almost like you can look at a stock's profit, and a lot of stocks don't have profit, or even like the ones that are killing it in your portfolio didn't have a lot of profit when they were killing it. And now finally, you know, their price to earnings is still crazy town, right?
Sure.
Yeah.
But TVL is almost like, it's not really like top line revenue, but that's how much revenue is floating around in there being transacted with. Does that make sense?
Sure.
So at least that gives you some comfort that, well, you're not like, you may be the last one in, but there's a lot of people in there. They're not heading for the door right this second.
Yeah.
Right.
I did mention today that, you know, when I'm looking at new protocols on any network, but, you know, mostly specifically Terra now, if it doesn't have 500 million to 1 billion TVL, I won't mess with it.
And see, I just pick a smaller slice of the pie, and I may mess with it, and I'll take a shot. But it's kind of like, there's always risk reward with everything. Like, I have a client from Ukraine, and he, when I found out that El Salvador was doing this, I heard that Ukraine might be adopting Bitcoin, and I called him, or I emailed him, and I said, hey, you know, by the way, I've been really digging into this. So if this is something you want to check out, like, let's just have a pro bono chat about it. I'm so passionate about it. I'll share with you what I know. And he's like, oh, I'm not ready. I don't know what regulation is going to be like there. I don't know what regulation is going to be like here. And the fact of the matter is like, if you wait, that like, you're going to miss out on all this. Kind of like if you waited till Amazon was actually profitable, you would have missed a lot of the risk premium and the profit along the way. Same thing with Microsoft and everything else, like you were talking about. So there's an opportunity here, going back to the theme of pick an amount that isn't going to hurt you or cripple you or cause you to be up at night or have you just be pissed off at the world or whatever. Just pick an amount, maybe call it his inheritance. Like, you're probably going to leave him something anyway. This is the way he'd probably like to receive it. Maybe just pick that amount and just say, hey, this goes to zero, you're out. Your brothers and sisters still getting their part, right? And play with it with like that. Then you won't at least feel so attached to it.
We'll have skin in the game, huh?
Say that again?
They'll have skin in the game.
Yeah. Yeah. That's one way. That's one way to look at it. So going back to my two fundamental analysis, TVL is a big one, and you'll see that Luna and Terra really just kind of leapfrog a lot of the big names out there. It'd probably be some of the shit coins we're going to talk about with Miley to get rid of. Maybe, I don't know. But they just leapfrog a lot because there's so much TVL and it's like a black hole, and like more and more is going in there. Not black hole in a bad way, black hole in a good way. And it's sucking and it's sticky. It's not leaving. Why? Because the user interface is so easy to use. And this is going to segue into the second method of fundamental analysis that I look at, developer activity. There was a ton of developer activity, and a lot of developers are leaving ETH to come to Terra because it's so much easier to build on, and they realize that that's where all the eyeballs and all the not dollars but quants, USTs are going to be transacting.
Yeah, I can confirm that too. I've read a lot of just different ETH developer like Medium articles and Twitter rants about how Solidity, being built, Ethereum being built on Solidity makes it it hamstrings it essentially, and that the Cosmos SDK, the software developer kit, is actually just much easier and much cleaner to work on and safer because it has that kind of a flash loan protection mechanism.
I have a couple dev friends, and I can't disclose which protocol, but they basically said just that. They were Ethereum developers and they felt hamstrung, and then they checked this out and they got to know Doe and everything else, and it was like, we're home. And they're going to expand intrachain, IBC, intra-blockchain, but they're going to start on Cosmos and Terra because it's so easy, and then branch out from there rather than starting from ETH and trying to do it. So those are a couple things like to maybe just help you DYOR, do your own research. Pops, I'm just saying, like, it's not the fundamental analysis you're used to, but it's something.
Well, they often say that on Fox News, do your own research. And what they're saying is to people with a high school education, go out and read the data that the PhDs are printing, and you can understand it for yourself. And it's fallacious on its appearance.
Yeah, and I'll be honest, I was just saying it to cover my ass, but it's just CYA language since we're putting all this on video. But here's the truth about blockchain and investing in crypto. Here's the truth. Everybody that does it, what they eventually do is they just take a leap of faith. And it's usually because of someone they trust. I know you don't know me from a hole in the wall, and you have no reason to trust me. And I'm not even saying you should. But that guy next to you, I think he's got your best interest at heart. And he's pretty knowledgeable about stuff. And everybody that gets into this, just like any financial decision, like, we're primates, right? We have a prefrontal cortex and an amygdala, like our lizard brain and our Buddha brain, right? Our highest functioning brain. And at the end of the day, where we make our decision is our lizard brain, where we finally just go, okay, enough, fine, I'm doing it. I'm doing something. So at some point, you're going to get paralysis by analysis here. And at some point, you're just going to go, okay, I've seen enough. I'll do something. Or you won't. Or it'll be like, I've seen enough and I don't like it and I don't need to understand it. I know what I know and I have what I have and I'm fine with that. Stop bugging me. Right?
Yeah,
it's going to be something like that. Are we all good? Is there more questions? I'm happy to entertain more, but I think that's kind of where it stands. If there's more, we can discuss it, or I can move on to Miley.
Yeah, I mean, suppose you're in one of these transactions where you're paying 16% to borrow Luna or borrow whatever.
UST.
And, okay, UST. And they're paying you 20% back, so you're making a profit theoretically. Well, why are they paying 20%? Tomorrow they could say, well, we need a little we need to make more money, so we're going to only pay you 10%. Suddenly,
Yeah, absolutely.
you're
I'm
losing
concerned about that.
6%. Yeah, then you're
Let's
losing 6% on the transaction. So where
let's
is
talk about that.
insurance that that won't happen on a regular basis?
You can't get it, that kind of insurance. But let's talk about that. The best insurance you can get for it, and I wish I had this kind of insurance, is you just don't borrow. Don't be on that side of the transaction. Gway, I don't think your pop should borrow. Why? What for? Right?
Yeah.
Don't borrow.
Point.
Be on the other side of that. You don't need to be, right? Start small, like just with any position size. If you're investing so much in anything to where it's bugging you, it's occupying mental real estate, you position size too high,
Okay.
right?
Yeah,
So-
I agree with that.
So pick an amount that you're comfortable with. Like, I don't bet on sports, but I know people that do. And it's like, if it's not fun to watch the game with you, dude, you bet too much on this stupid game, you idiot. Right?
Right.
like I could throw $20 into a Super Bowl poll and woohoo, I won, or oh, you got me, who cares? Right? But if you're like in knots on the couch next to me, get out of here, right? What are you doing? So pick an amount that you're comfortable with. Don't get on the borrow side of the ledger, but let's talk about that, because I think that same concern I know bugged me and I know bugs a lot of people. So let's just talk about that real quick. Going back to my VC argument, the amount of Anchor tokens that they're using to subsidize borrowers is limited. So it will not last, and that will change, and it for sure won't be as favorable as today. And today isn't as favorable as it was yesterday. So I don't think you should enter that side of the ledger. Period. End of story. You don't need to.
Makes sense.
So let's talk about the sustainability of Anchor as a whole and why they're doing what they're doing. Are you familiar with the tokenomics or the relationship between UST and Luna? Has Gway explained that?
Sort of.
Gway, why don't you do it again for real quick?
I mean, that is basically it has to equal out. I always say it's a two-way fax machine. $1 of Luna goes in this side. $1 of UST is minted on this side. It can go in reverse, but with the demand of the stable coins, at least what I believe, my thesis is that the demand of stable coins is going to rise and rise and rise, just like
yeah, but let's not hide around the reverse. If for some reason UST gets dumped, what's going to happen? Let's tell your dad. Let's tell your dad, because this is what's going to happen.
Goes down.
Luna's going to go down because.
Yeah.
So it's really like this: to mint $1 of UST, it's not like the U.S. economy's tokenomics where you can just print, and lots of cryptos are like that. Where they just print inflationary tokens. Oh, we're paying for staking? Great, we'll just print more. Luna's not like that. All the staking rewards comes from the transaction fees of people spending UST, which is really, or any stable coin, which is really, really nice. Yeah. Also, as more people adopt UST, as they opt into the system, just like your son said, they have to mint $1 worth of Luna, and that value will fluctuate. They have to mint one, or they have to burn $1 of Luna to mint $1 of UST. So it causes for a deflationary thing to where if you're a holder of Luna and more people are coming in to mint UST, even if the number of sellers and buyers is exactly the same, right? That's what's cool about Luna is for any other token, you need more people to buy Bitcoin than sell it. Luna, you don't. You could theoretically have a slightly less buyers and sellers, but have a lot of UST minters and have Luna go up.
Yeah.
Which is totally unique and amazing. And I agree with your son, but I don't want to hide behind the fact that there is a risk. And the risk is if for some reason UST depegs or somebody breaches a smart contract and there's a glut of people that dump UST onto the market. Well, what happens is when they burn the UST, Luna is then minted, and that's going to flood the supply of Luna. And what's going to happen to the price of Luna?
It's dropping like a rock.
That could happen. So position size accordingly. What has been happening is the former. More and more people are adopting UST, and we're just getting started. And so Luna is getting burnt. It's hard to even buy it. It's hard to on-ramp. A lot of the price appreciation of Luna lately has to do with the fact that more and more people are minting UST.
Yeah.
So go ahead.
I mean, you mentioned deflationary, but it just hasn't been clarified yet that no more Luna can be created, right? We're down to what, 830 million, and I think 60% of that is staked or something. And they're burning like $1 million a day right now.
And I bought some of the dip today, right?
Yeah.
This is not financial advice. Everybody has to do their own research. Sorry, Pops, I had to do it again to cover my ass, but everybody's got to do their own research. I bought some of the dip today because of that factor.
Yeah.
And it just got listed on a major exchange. It hasn't even got listed on Coinbase. And if it's even interesting to you a tiny bit, to some degree, you may just want to be as early as you can.
Yeah. Yeah. I admitted to Miley yesterday that back in March, I did a 5-minute dive on Mirror Protocol, and I looked at UST, and I briefly looked at Luna, and I said, not going to make it. And I ignored it, and I went to Binance Smart Chain.
Hey, you did all right there.
And that is my biggest regret of the year, because I didn't look at Luna again until July.
When's the best time to plant an oak tree? July. When's the next best time?
Yeah.
Now, right? So at any rate, let's close the loop on Anchor, and then we'll get to Miley Stack stuff. So Anchor, here's my theory, Pops. And I think this is a sound theory. Terraform Labs, they know that the special sauce is minting UST, and that's what's going to make everything blow up in a good way. Expand, not blow up. Expand. How do you get people to mint lots of UST? You give them a 19%, or I think it's down, but whatever. You give them something in the high teens interest rate on stable coins, right?
You beat every other stable coin in dividends. Yeah.
You crush it.
Yeah.
And that doesn't seem very sustainable to me. I know it doesn't to you. And honestly, I don't think it is in its current form. But how could we get enough bait? How can we get enough bait to get a bunch of people on here, get some critical mass, and then we can bring it back down to earth and still have it be better than what you can get at Chase or Wells Fargo or WAMU if it was still around? Still beat the snot out of that, because it does come from people borrowing, and people will borrow, maybe not as many and to the degree that they are now, but people will borrow. And in order to borrow, they have to post a yielding asset in the form of staking. And if there's a lot of critical mass earning staking yields and the borrowers are giving up their staking yields to the protocol, then the protocol can take that staking yield. And actually, it's almost 2x. It's not quite 2x, because they'll let you borrow 60% loan to value. But they have to, since they're collecting almost double the collateral and the borrowers are basically opting out of collecting those staking yields, that gives a lot of yield that you can give to depositors.
Yeah.
So that occurs. What's the big elephant in the room is the Anchor token, the subsidy.
Yeah.
And I likened it to this. What I came to peace with, because I knew, I was like, this is crazy town, right? This is not going to last. And I don't think it's going to last. Well, I know it's not. They've already said there's a limited amount of token, but it's happening now. So I'm taking advantage of it now, and I'll unwind that loan when it's not as favorable, right? And guess what? Because Luna jumped up, if I had to just kind of liquidate everything, if I take on debt, but I have a corresponding asset that's of similar value, am I in debt? No, because I have one-to-one. It's just in different pockets. If I take on debt and an asset appreciates like it has, and I liquidate everything to pay off the debt, am I in debt? Not really. Now, if the whole thing crumbles, well, guess what? So is the debt too.
Yeah.
So I decided to take a leverage position to a degree. There's some in our community that do way more than others. By the way, if you're interested in that, I'll just say that I'll put in the description, Tokenomics is like Jedi of this and has a whole doc of pinned tweets if you're interested on the borrowing side. I don't think Pops is, but I just wanted to share that with the other viewers. But going back to what's happening now, that Anchor token subsidy, the reason why they're subsidizing my borrowing, they're letting me borrow at 20%, and they're paying me either 19 or 21, depending on the day or the algorithm. And I've seen as much as like a 2.5 spread either way. Before I was around, you could borrow at positive 13. Well, guess what? That's because there was hardly anybody using it, and they needed people to use it to pay all the people that wanted the 19%.
Yeah, and so, in the beginning, like back in May, the borrowing UST off of Anchor was a 260% APR.
That's awesome. So you're doing a couple things there. You're making me jealous, and you're also making Dad suspicious. So zip it for a second.
Okay.
Yeah. So I have two questions. Who mints UST?
So if you go buy some, or you go to the Terra Station wallet and you go convert another coin to it, that is minting it. It's happening on the blockchain.
There's an unlimited supply of UST as long as you have something else to buy it with.
And there's, yes, that is true. And people will say, well, if there's a limited supply of 0, won't Luna go to 0? And the answer is no, because if that happens, then the value of Luna just keeps going like this. And so you just need smaller incremental pieces of Luna to mint that UST. Does that make sense?
Yeah. I also remember when money market funds refused to break the buck until they did. You know, it turned out that they were backed up by a bunch of leveraged short-term muni certificates or something like that could lose money. So yeah.
Wait, Gway, do you want to tell Dad, were you around when it depegged? And just real quick.
Back in May?
When you're talking to your dad, because I realize I'm going to leave this conversation. Rather than tell him all the bright, shiny objects, I think you'll have more traction with Dad if you tell him like all the worst possible negative downsides. I think you'll have a lot more traction with that. So tell him about when
I didn't even know, you know, like when I said Mirror Protocol wasn't going to make it, I didn't see Anchor. I don't know why, but I just missed it. Okay. And I knew that, you know, Luna was related to Mirror, but you know what I mean? Like I didn't dive enough, and I just said, not going to make it. It's too suspicious. Right. Yeah. And I didn't know about Anchor back then. So no, I wasn't, I was obviously in the market.
Heard about it though, right?
Yeah.
Lost like 15%. So like,
it went down to 80,
all the way down to like 85 when Luna was losing like 80% of its value.
Yeah. Luna went from $14 to $4, I believe.
Somewhere thereabouts.
Yeah.
So apparently Pops, apparently they've done a lot. Huh?
It was Bitcoin crash in May.
It was a Bitcoin crash, but
everything. So yeah, broke the buck, got down to like 85.
Yeah.
And apparently they've done a lot to bolster the algorithm. And there's already been people like on Twitter saying like, you know, anybody that comes in here, like with a bunch of money, they could just torpedo this thing this way. And so they call that I forget if they call it the depegging FUD. FUD is fear, uncertainty, and doubt. So they call that the depegging FUD, excuse me. They're apparently coming out. There's already insurance you can get. It's through the ETH network, but there is depegging insurance you can get. To my friend's point, that's really early on Bitcoin. It has a lot of Luna. He said, how do I even know they're going to be around if the buck gets broken? It's kind of like FDIC insurance. What do you think about FDIC insurance, Pops? Tell the truth. What do you think about that?
If something really big happens, there's not enough capital to actually do it.
Yeah, if any of the big banks, if a small little regional bank in the Ozarks needed it, fine. Wells Fargo, Chase, Bank of America, even whatever, US Bank, any of them need it, guess what? Everything you have is a hygiene product. Your stock certificates, your deed to real estate, you better have some metals, like precious and not so precious, like lead and powder. You better have some metals. Because things are going to get ugly. I like where you live. I may come up and hang with you guys. That happens. but
we have.
I guess
we have lead and powder.
We've got lead and powder.
Nice. I do too. Yeah. I guess what I'm saying.
Best reserve asset.
Yeah. Yeah. So I guess all I'm.
So mine's not that handy.
Yeah. Just in case, you know, I'm in an office at night, and I'm not a very good aim, so you know, so at any rate,
I mean, I have another point unless you want to finish something.
Yeah, I did just want to tell them what they've done to bolster that. So apparently they've bolstered the algorithm. Like it was a great kind of battle test, and the fact that it don't like Luna lost 80% of its value, but that's a market-based asset. And the fact that it only lost 15% is actually a testament to, like, they built something pretty cool and they've been able to bolster it. There's probably people more technical than me that can talk about what they did. But also they're talking about putting up a $1 billion Bitcoin reserve. That's not official yet, but there's this like kind of rumor about redacted stuff. And I think that's probably going to be happening. That there's going to be a Bitcoin reserve too, if it breaks the buck. And aside from that, there's another protocol called Ozone that's coming out that is partnering with a bona fide, legitimate insurance provider that is going to have depegging insurance where you give up some of that yield. So like, even if you got 14 instead of 19 or 12 or whatever, and it was insured through a bona fide insurer, rest assured, unlike FDIC, there's a bunch of crypto people that aren't going to give up the yield. You might, I might actually, but there's a lot of people that may not. And so that form of insurance may be a lot more viable than FDIC. How does that land with you?
Well, that's interesting. Let's hope we never need it, huh?
I agree.
And so far, Ozone only insures for depeg risk, correct? Or is it also?
I think smart contract as well.
Just smart contract risk. Okay, so a hack, essentially a steal. Yeah. Okay.
Yeah, but my developer friend who's working on one of the big upcoming protocols, he was talking to my other buddy who's super risk averse. He's kind of like Pops. He was just really early and kind of got lucky and, you know, threw in a little bit of money, and now it's a lot of money, but doesn't take any risk, doesn't do any crazy degen stuff, just kind of buys and holds, does some staking, and doesn't even want to do anything outside of staking because he's worried, like, what if their smart contracts aren't as good and there's an extra layer of smart contract risk? And so I was saying, like, I think you're overthinking it. And what our developer friend, who's really more his friend, newer friend of mine, he's known him for a while, he said, listen, when there's a protocol that's been around and it's that big of a honey hole, those were his words. It's like Anchor, you know, huge honey hole. How many billions now, Gwei?
Anchor has 8.3 under TVL.
I think it's more, right?
Yeah.
It's more now. Well, anyway, I think it's more, but that big of a honey hole that's been around that long, if there was a way to crack it, somebody probably would have cracked it. But if you wanted to insure for that, you can too. So that's my understanding. Any questions about that, or do you want
8.5, about 8.5
okay.
right now.
I guess you're right. I thought it was more. Did you want to move on to something, Gwei or Pops? Did you have a question about that?
Well, I just remember reading about the depeg risk and how the Terra protocol itself was basically only meant to handle $20 billion worth of Luna redemptions per transaction. And the way that the protocol was working back in May and during the Luna crash, it was trying to handle $80 million worth of redemption transactions. And so that's partly what caused it to go off of the peg. But then, of course, the benefit to going off of the peg are all of the people who get to buy it off of the peg,
right?
If and once it comes back to the peg. There's an army of arbitrageurs.
Yep.
that have unleashed an army of bots.
That's a great point. Did you catch that, Pops? Did you understand what he's saying?
There are computer programs that run all day and all night to try to catch even a thousandth of a cent off of the UST peg, and or Tether or USDC or DAI or PAX. The bots are basically like,
they stabilize.
They stabilize. Let's make a buck today.
They're arbiters that are looking to make a buck. And Sefi said this the other night. I was on a space with him and he said it great. He said, as there's more and more real world off ramps, and I would argue that UST and the Terra ecosystem has the most certainly coming. And right now, I think you should show him at the end of this call how he can go buy some gift cards with Kato money, like right now. So when one UST can be exchanged for real world goods and services, and there's the slightest depegging, what your son's saying is there's an army of bots and an ocean of money waiting to get that back up there because they want to buy it at a discount so they can arb it on another chain in their stable coin that hasn't broke the peg, or go exchange it for real world goods and services. Does that make sense?
Sure.
Yeah.
So again, it's not the legitimacy that you're used to, but
Right.
crypto's really, it's not really the wild, wild west per se. But what's cool about it is it really is functioning in equilibrium at this moment due to free markets, which is pretty cool.